We have an instant audit on it as we bring back Jim Frischling of NewOak Capital, and that's really the bet right by the United States now. And this is maybe a little different than you might have thought it would play out just a few weeks ago. Is that hey, the Chinese, if left to their own devices, will do this anyway at some point. They'll let their currency start to appreciate. Think that'll work?
I think diplomacy and negotiations is what Treasury Secretary Geithner and the administration is trying to go with. And I think any time you're dealing with the single largest foreign holder of U.S. Treasuries, that maybe the word diplomacy makes
well, because
a great
they don't
deal
like
of
to
sense.
be told what to do to some extent, right? And their leaders, from their point of view, if you try to take the Chinese point of view on this as opposed to the American point of view, you see American politicians kind of dictating what their policies should be, and their response to your point is probably going to be like, hey, wait a minute, we're holding the cards here, so to speak. We hold all this Treasury debt. Be careful how you speak to us.
Well, I think when you lend somebody a lot of money, when you lend someone a little money, you might control some of the situations. When you lend them a lot of money, maybe they control the situation. But I think the simple balance is both parties, both countries need each other in this situation. So while I know some politicians are touting for tariffs and penalties and declaring China a currency manipulator, I don't believe the U.S. has declared another country a currency manipulator since '94. So I don't think now's the time
do you think the Chinese are, by the way, just in literal terms, if you take away all the diplomatic necessities and all that kind of stuff out of the equation, are they manipulating their currency? They are, right?
Well, you know, Mr. Summers refused to, or did not go as far to say they were a manipulator. I think I'd shy away from it as well, although it appears that that the
currency's undervalued.
It appears the currency is undervalued. And by the way, the yuan forwards are last week, I guess, hit a 3-month high. Right. So what I think the view from traders is that I guess China will allow it to start appreciating.
Because economically, it'll be in their interest at some point, right? They're fighting in other words, they had let the currency float a little bit for a few years in the middle part of the last decade, and then they pegged it again to the dollar when the crisis struck. Now they're worried about inflation and their economy essentially growing too fast and or overheating. So at some point they'll just take that peg away. That's the economics of it, don't you think?
And I think that's exactly right. But keeping it somewhat, let's say, or allowing it to stay undervalued certainly was beneficial from a pure export standpoint, which I guess greatly benefited. And that's the complaints of Senator Schumer and others that the U.S. should step in more aggressely. But I think let it play its course.
And at some point they'll want to boost their imports, though.
And
on the other side,
I think that's right. So I do think there's the belief that this will happen somewhat on its own or naturally.
Right. What do you make of the overall relations with China and how important that bilateral relationship is for the United States now, not only with this issue of currency, but what about businesses doing business there, like what's happened after Google is that we've seen surveys come out so American businesses aren't as confident and or comfortable doing business in China as they were in the past. Is that something we should be really concerned about?
You know, on the technology side, you saw Google come out, and I even on one of your programs, GoDaddy came out and basically pulling out of China, and yet Pepsi came out saying that relations have never been stronger with the company. And
depends on the company.
It depends on the company.
And the industry.
Exactly. So I think from a technology standpoint, there's some strain, but I've heard a number of, let's say, other industries commenting that the relations and whatnot are getting better, and however, I've never been this good.
So don't paint it with a broad brush is probably the point. Right. All right, Jim, thank you very much for that.
All right, for more on this, we're joined by Jim Frischling of NewOak Capital. Thanks for joining us, Jim. So is this over? I mean, this guy brought in, I was just looking at some of the numbers here, $280 million over an 8-year period. He was referred to as the man who crashed the world. I mean, is this over?
I'm not an attorney, and I don't play one on TV, but I will say it appears that these cases are very, very difficult to prosecute and do so successfully, especially when it confronts when it's against individuals. And I think to date, the only case that's been tried has been the Bear Stearns hedge fund and those managers, and they were acquitted.
They were acquitted, and even when we got the Lehman report, the takeaway from most people, not all, but most people, was that the Lehman Brothers executives, especially at the head, someone like Dick Fuld, would not be held legally responsible, would not be charged. Here, AIG, not going to be charged. And as you say, the Bear Stearns hedge fund managers acquitted. So What do we make of all this?
You know, AIG as the poster child for this, I guess, for this what went wrong and for the financial crisis, I expect there will be a lot of populist anger that there is no one taking the fall for this. I think one of the biggest challenges at the time that these deals were put together, again, they were AAA rated in many cases, or highly rated. There was many of these markets were very well bid, so it's very difficult, I think, to with the market at one time being so robust, very difficult now, or at least with the benefit of hindsight, you could say clearly there was a mistake. But can you actually say at the time that the investments were being made and the positions were being put on that these individuals knew what was going to happen? I mean the market.
That's the bottom line right now. It's the instruments that he was using, the credit default swaps, were not illegal by any stretch of the imagination. The problem that prosecutors are trying to find evidence that he was actually lying to his superiors about the financial state of the company and his work.
And there appear to be some notes between PwC and Cassano and AIG. It seems that there was disclosure being made to their auditors about some of the trades that were being put on.
Might work into the conversation about the financial regulation to some degree, because if you can't prosecute stupidity, maybe you can regulate it. Is that fair?
That's an interesting point. I guess certainly you can require quite a bit more disclosure. I know if Mr. Charles Payne were here, he'd be unhappy if I said you could raise capital adequacy levels and you could reduce leverage to make sure the risk is at least contained. I know he doesn't like it when we talk about more regulation. But again, I think it's going to be very difficult to prove that just that somebody's bad judgment or mistake.
But even he and a lot of people have been open to some kind of at least transparency in the derivatives market, and the increase of capital or requiring firms to hold more capital seems to be fairly popular. You know, a lot of people. I don't know a lot of people against that as a concept. No?
And in the case of some of these derivatives, putting them on an exchange.
And know what you're dealing with.
And again, I think more people are in favor right now, away from Wall Street, of seeing this regulation come in.
You know, there is still populist anger out there, and the public's going to hear that this man doesn't get charged with anything. So the big question then becomes, does no one, after Cassano, does no one at AIG get charged for the fallout of this company?
I guess what I understand is there are quite a lot of lawsuits that are brewing, again, against companies. But going to the individual,
But if they can't charge this guy, is there anybody else in the lineup that they can possibly get?
You know, I think it's to be determined, but it's going to take quite a few years to sort all of this out. But I will tell you that there are a lot of attorneys very busy. There's a lot of investor groups very busy. Even large titans of the industry are getting ready to go against each other in terms of what was disclosed, the marketing presentations, and again, I think this story needs more time. We're not even at halftime yet, but in the case of Mr. Cassano and of AIG or individuals, I think this is going to be yet another example of how difficult it's going to be to actually try to, I guess, find a guilty party on an individual basis.
Go ahead, Sandy.
I guess at the end of the day, though, the guy took home $280 million, and charged legally or not. You know, assuming that he did nothing wrong, he still walked away with $280 million after the company completely failed. Seems very unfair.
And I think, and unfortunately, AIG, given the contracts that have been written, continue to pay its bonuses. In which case, I know that only infuriates people further. But there is a nice improvement to the AIG story, and since the taxpayers are a substantial shareholder,
you like what Ben Moshe's doing.
Absolutely, and slowing down on some of the liquidations and the timing of some of these liquidations is certainly benefiting AIG and therefore the taxpayer. But you're right, people are going to be very upset that yet again the poster child of this crisis is there's going to be nothing other than a slap on the wrist, and maybe not even that.
I wonder if he'll ever work again.
Oh. I don't think he has to.
I don't know, right? He's got your $280 million, as you said. All right, thank you, Jim. Good to see you. Jim Frischling with us today.